In this lesson, I'm going to show you how to make your Forex watch list and which currency pairs actually to focus on. And I'll talk a little bit about the different data feeds from the various brokers that are available out there. So I'm going to keep this lesson very simple and very brief. So with that said, let's have a look at the charts. So in the previous lesson, I already talked about how we will only be focusing on the major currency pairs, so only the major global economies, such as the Australia, US, Canada, European nations, the UK, Japan, Switzerland, and I think that's it. So when we look at the charts here, and what you will see here on the right hand side is my Forex watch list, which includes all the major pairs that we will be looking at. So I highly recommend that you just go and write these guys down. But this is how you go and add a currency pair. Okay, so every single one of these is a pair. Australian dollar paired with the US dollar, Australian dollar paired with the Canadian dollar, and so on. Canadian dollar paired with the Swiss franc, Swiss franc paired with the Japanese yen, okay, euro paired with CAD, and so on and so on and so on. Okay, so when you go to add a symbol in TradingView, majority of you will be looking at TradingView. So if you haven't gone through the TradingView course yet or the lessons yet, just come back to this lesson when you actually watch those so that you know how TradingView works and so on. But when you go to pick a currency pair, when you type them down, I just recommend you take a screenshot of everything that I have listed here. And then when you go to add them yourself, you're going to see that when you search Australian US dollar as an example, AUD USD, that's the short form. And you can see it pops up Australian dollar versus US dollar. We have various data feed. These are different brokers that are available out there. So this is a data feed from the FXCM broker. This is a data feed from Oanda broker. This is a data feed from Forex.com. This is a data feed from Saxo, okay? And this one right here, ICE, is a very important one. ICE is a combination of various data feeds. So let me talk a little bit about that. And basically, you can choose a data feed that is related to one broker, such as FXCM, okay, which is a very popular global foreign exchange broker out there. And if you choose to use the data feed from FXCM broker, okay, then the data that you will be looking at here, the charts that you will be looking at, they will be based on FXCM data, okay, which is good in a way, specifically if FXCM is your broker. That's awesome, because then you're looking at exactly the data that your broker is providing, or in this case, you're looking at the data that FXCM is providing, which is good, but there's a negative to it. Sometimes the data differs a little bit between the various brokers because of the spread that they offer and so on. So sometimes, like I said, the data feeds will slightly differ by a few pips here and there, okay? So ICE is a composite data feed, which is pretty much an average of multiple broker feeds, okay? It averages them out and it gives you kind of an average point of view of the global currency market. So if you look at the charts here again, and let's toss in two different data feeds here on the Australian dollar, US dollar, FXCM, and ICE. So we have them here at the bottom, and if we turn them on, you'll notice that they're very similar. They're pretty much doing the exact same thing. Not much of a difference. This one closed at 69130, and this one closed at 69126. Not much of a difference, right? So you can see that, again, it doesn't really matter which broker feed you choose, whether you choose an average of them all. I typically prefer to use the average simply because I don't want to be biased to one broker feed. I like to see what the average is showing me. But some of you might prefer to use just one broker feed because, it's consistent, and where it will mainly differ is specifically if you're looking at Swiss pairs or Kiwi Swiss pairs. They tend to have really big spreads. So this is the last thing I'll show you here real quick. And if we flip on a 5-minute chart as an example on the bottom here, this is the composite data feed, and you can see it has like these weird long wicks that we call them, versus if you look at a Kiwi Swiss FXCM feed instead, it doesn't have those wicks. That is because simply when you combine multiple broker feeds together, there's a very wide spectrum of spreads throughout the day. So hence why on a 5-minute chart, on a very micro level, the composite feed might have those little long wicks. But in general, on a higher time frame point of view, it will be much more of an average. So that is it for a brief introduction to REFOR and how to make your Forex watch list. I recommend you take a screenshot of what I just did there and populate it yourself. But that is it for this lesson, and I'll see you in the next one.